automation. My name is Kimberly Chatfield, and I'm the event specialist here at the Institute of Financial Operations, and I want to thank you for joining us today. Just a few housekeeping notes before we begin. We will keep the phone lines muted throughout the presentation, just to ensure that everyone can hear clearly. We will have some time at the end, however, for questions, so please submit any questions you may have there on the question module through the GoToWebinar dashboard, and we'll get to as many as we can. So without further ado, I think I'll go ahead and introduce our speakers today. We've got Charles Kaplan, Director of Marketing for Perceptive Capture and Search, as well as Mark Brousseau, President of Brousseau & Associates. Hi, gentlemen.
Good afternoon. And thank you all for joining us. Kimberly, it's always a pleasure to work with you and to work with IFO, and it's particularly a pleasure to be here this afternoon and be associated with this exciting project that we're going to tell you about. A few housekeeping items before we get started. Don't wait till the end to send us your questions. We're going to cover a lot of material today, and as questions occur to you, go ahead and send them to us using the electronic chat tool on your screen. We'll answer those at the appropriate time, either during the webinar or at the end. Also, throughout today's webinar, we will be posting a series of poll questions to get your opinions on some of the topics we're going to talk about. So don't lean back in your chair too far. Go ahead and be ready to engage with us in our discussion today. And finally, we'll send you the recording of today's webinar automatically. No need for you to go ahead and request that. We will send that to you at the conclusion of the webinar. So our topic today is a practical guide to the 5 levels of accounts payable automation. When I think about AP automation, to me it's really been a story about unfulfilled promise. For years, this industry has been saddled with high volumes of paper invoices and high volumes of paper payments, and that really still exists today. And all of this paper to you folks has meant high costs, lots of errors, slow turnaround, and importantly, a lack of visibility into that critical financial data. And when I think about an AP department, I think there's a tremendous amount of untapped data that goes through your organization every day. And the irony has been that there's lots of tools and technologies to help automate and eliminate this paper, things like imaging and OCR and e-invoicing and supplier portals. And yet the adoption has remained slow. And when you talk to organizations, what they tell you is there's a number of reasons that they haven't adopted these technologies. You know, some cases it's supplier resistance, perceived or real. In other cases, it's tight budgets, limited resources. There's lots of reasons, but I think one of the key reasons that doesn't get as much visibility as it should is concern about, how do I do this? How do I skin this cat? What's the process? What's the journey that I need to undertake to automate all of this paper? After all, there's lots of it. And there's lots of inefficient processes. So really, what organizations have needed for a long time is a roadmap. How do we get from this paper-based, inefficient environment in which we currently live to that paper-free electronic environment, nirvana? And that's really what we're trying to do with this project, to create a diagnostic tool to help organizations understand how it is they can go about this process. And we're starting to see organizations address automation, and we're going to talk about that in just a moment. So with that as the level set, let's get started. And we wanted to begin with a poll question, which is now about to be displayed on your screen. What we want to know is what percentage of your invoices arrive as paper. What percentage of your invoices arrive as paper? More than 75%, 51 to 75%, 26% to 50%, 11% to 25%, or less than 10% of your invoices? Take a moment to respond to the poll question now displayed on your screen, and we'll talk about the results in just a moment. And thank you for the quick response from many of you. I see we have just a few more folks who need to respond. Go ahead and do that now, please. We're going to go ahead and close it out in just a moment. What percentage of your invoices are paper-based? We're going to go ahead and close that. And now let's share the results. And Charlie Kaplan, no surprise to me, the plurality of folks on the line, 37%, say that more than 75% of their invoices are arriving as paper. The next highest percentage, 30%, 1 in 3 folks on the line, say that 51% to 75% of their invoices arrive as paper. And if you do the quick math, 2/3 of the folks on the line say that more than half of their invoices are arriving as paper. Only 9% of the attendees on the line say that less than 10% of their invoices are paper-based. Charlie, how does this jibe with what you hear when you talk to AP organizations like the folks on the phone today?
Yeah, no, it's a great question. So first off, I guess I'm not surprised by the numbers. And I think, if we had more time or ability to ask more questions, what we might find is that with the organizations that have even reduced the amount of paper that they have so that it's a relatively low percentage, in some organizations that we work with, it's still a significant volume in the absolute. And so, while I think, and this is part of the story that I think we really want to talk through today is, this notion that getting to a paperless office or working through paper is something that many organizations work on over a long period of time. And so it's enlightening, but I think through the course of the discussion today, I think we'll maybe take it a step even further.
And when we talk to organizations across the community, so folks beyond this call, what we find is that these results are not unusual. In a study about to be released by IFO, their annual AP automation study, IFO found that 71% of the organizations that responded to the survey say that at least half of their invoices are paper-based. So it's actually an even higher percentage than what we found here today. And the study also finds that 42% of the respondents say that their volume of invoices are rising. Now that's significant because if you're saddled with an inefficient, costly, error-prone, paper-based process that's cutting you out of opportunities to capture supplier discounts, you don't want to see your invoice volumes rise because the problem's only going to get worse. In fact, this IFO study also showed that the plurality of invoices, the plurality of respondents say it's costing their organizations $2 to $5 to process a single paper invoice, $2 to $5. Now compare that to the plurality of the respondents who say it costs their organizations less than $2 to process an electronic invoice. So you can see where these costs start piling up. Even more troubling to me is that 13% of the respondents to IFO's study this year say it still costs their organization more than $10 to process a single paper invoice. And I bet if you drilled down into that data more, you'd find that the numbers are probably higher depending on how organizations allocate their costs. The problem is nearly as bad when you consider the outbound payments that are coming from an AP department. IFO's study is going to show that 52% of business-to-business payments are still made via paper check. This is much better than several years ago. 3/4 of the respondents to the study agree that their volume of electronic payments has risen, but we're still in an environment where there's just too much paper in both the payment side as well as the invoice side. And this is critical because there's a lot of problems associated with all this paper. Aberdeen Group did a study last year of organizations to ask them what their biggest challenges were in their organization. The top challenge, a lack of visibility into invoices and AP documents. I guarantee you that the vast majority of folks who identify this as their problem are involved with paper-based processes. You just can't get at that data. And if you can get at it, it's a costly, time-consuming, error-prone process. The second biggest problem organizations are facing, corporate directives to lower costs. Now, this is a fascinating result here to me because for years, the #1 challenge that AP departments would tell you about is costs. Well, we've taken out all the low-hanging fruit. And now what we're finding is that there's pressures from senior management to be able to drill down into all that data that I alluded to that goes through the AP department and be able to do something with it. CFOs identify capturing more supplier discounts as one of their top strategic priorities. And yes, that's hard to do if you've got a paper-based process that's too slow, and if you don't have access to the data to be able to make an informed decision about whether it makes sense for you to capture this discount. So we're starting to see a switch where organizations not only are focused on cost, but it's also visibility. It's not just going to be about faster, better, cheaper. It's going to also be about how can we get at that data to help us make more strategic decisions. And that'll be paramount for you folks on the line to be able to fulfill those needs in order to remain viable to the organization. So it's against this backdrop, with these challenges, that IFO and Perceptive software collaborated to create a new tool called the Paperless Office Maturity Model. And that's what we're here to talk about today. Charlie, talk to us about how this became, why it is that Perceptive was so keen on being a part of this project.
Yeah, well, thanks, Mark. So I think a lot of the things that you offered that sort of lead into it are challenges that we work through with our clients day in and day out. And so, you know, as we observe this, and certainly through our partnership with the IFO, we came to recognize that there was a certainly a need within the market space to begin to identify not only, you know, where, for example, our organization is in its relative maturity, but to also think about, you know, how to gain insight from best practices from other organizations and sort of think about it as how we plan a roadmap for how we move forward. You know, Mark, and we discussed this, right? I think there are plenty of ways to sort of evaluate components of your current environment in accounts payable, right? You can answer questions, complete a survey instrument, and get an idea of where you are. But what we wanted to do was really take it one step further, because I think it's important to understand where you are, right? But oftentimes what folks are asking for is, what are the reasonable steps we should continue, you know, consider as we want to move forward, and what should we do next? And so we worked with the IFO, and we conceived of and now have implemented this Paperless Office Maturity Model that's focused on accounts payable to try and create that roadmap, help organizations think about where we are today so that we can choose the technologies, the processes, the structures for how we can move forward to the next level. And at a minimum, what it does, right, is I think what we're finding is it helps foster the discussion. It's not so much about where we are today is good or bad or otherwise. It's more about, do we as an organization internally understand where we are, what we've done to date, and what things that we can prioritize so that we can move it to the next level. And so, you know, as I think you'll talk through in just a few moments, we defined 5 levels of paperless office maturity, from paper-based, which is, I think, characteristic of many organizations, to paper-free, which, you know, I think the theme through all of this is that we generally equate paper with a certain amount of inefficiency, and for organizations that are really trying to drive new value in their shared services or in their AP operations, they're really thinking about, how do we get to the information, right, beyond the transaction, past the issues of quality, data quality, to the notion of we can create value. And so I think this roadmap, as we sort of work it through and play it out for organizations, will help the people who engage with it, right, those of you on the phone, work within your organizations to have strategic discussions about how you get from where you are to the next level.
And just as Charlie articulated, this isn't a survey. This is a roadmap, a diagnostic tool for charting your journey. So it's a living document. We don't stop it at any point in time and say, this is it, these are the results. This is how you compare. what you do is you use the tool on a periodic basis to be able to chart the progress of the different tools, processes, and technologies you've implemented to see how you're moving along your journey. The survey, the model has been live since Fusion, so now since the middle of May, and organizations are already using it to be able to figure out where they stand on the road. And today, while we're not here to talk about the data, we're here to talk about how you can use this information, I did want to share with you, as illustrative of what most organizations are facing, some preliminary results. Among the organizations that have already used the maturity model, and it's a wide range of organizations in terms of size, vertical market, and invoice volumes, what you can see is half of the respondents fall in level 1. This is that paper-based environment that all of us lived in several years ago. 24% of the early users of the model are in level 2, and I'll explain what that means in just a moment. So you can see by the breakdown that this is indeed a process that our industry is going through, not just organizations. And you can see that by virtue of the fact that only 4% of the early users of the model are in level 4 and 3% are in level 5, that most organizations are still beginning their process, are somewhere in the early stages of their journey. And this is more important than ever that folks use tools like this, because Aberdeen Group did a study last year and found that automating invoice receipt and workflow processing is the #1 effective strategy of best-in-class organizations. So if you want to become best-in-class, it's imperative that you find ways to become paper-free. So how do we start the journey? The first level is, of course, paper-based, and this is where we all were in the not-too-distant past. This is an environment where it's entirely paper-based invoice receipt, and many of you are living with this today. It's an environment where there's manual indexing, storage in file cabinets, and boy, those file cabinets, if you think about those, they're incredibly costly. The average file cabinet holds 20,000 documents. Every 12 file cabinets, they require an additional FTE. So if you stick your head out your office and look down the hallway at all those file cabinets lining your halls, you can quickly figure out all the costs associated with them. Of course, manual data capture, this is where the costs start to really come into play in an AP environment. APQC estimates that 60% of the median AP costs are associated with labor, and many of those costs are associated with keying. Paper environments have manual approval workflows, what I call the sneaker brigade. You've got to find ways to get those invoices routed to somebody's desk. And at this time of year, they're probably on vacation, so it's probably going to sit there, and then you're going to get the inevitable inquiries by phone and email. And those add up. We find that the average cost to just pick up a supplier phone call is about $3.80. And that's before you have to involve a senior manager or another employee to help resolve the inquiry. And typically in a paper environment, it's ad hoc, manual reporting. This is the world of spreadsheets. This is the world of creating docs on the fly. And of course, it's a decentralized, disconnected environment. The information's locked on paper. So the bottom line here is that this is a costly, transaction-focused environment, and importantly, it's unsustainable as invoice volumes grow, as organizations grow, and as their needs grow. So where do our respondents fall in terms of the early users of the model? Well, we found that more than half of the folks who've already used our model receive the majority of their invoices as paper. So it's incumbent on them to find ways to automate what happens to that paper once it arrives on their doorstep. The second level of maturity is image-enabled, paper-based invoice receipt with front or back imaging. It used to be that back-end imaging was the easy way for folks to dip their toe into the waters of imaging. In many cases, they were just looking to eliminate file cabinets. So this was truly a scan to archive kind of an environment. The dirty secret, of course, was that many of these organizations were still keeping the file cabinets because they didn't trust the technology. Well, we've come a long way since then, and organizations recognize that we have proven technology that not only can help eliminate the back-end file cabinets, but can drive efficiencies from the point at which a document arrives on your doorstep. And let me tell you, no matter what the e-invoicing vendors would have you believe, there is not going to be a point in the not-so-distant future, even short of government mandates, where we're going to completely eliminate paper coming into an environment. Even the world-class organizations that have deployed e-invoicing still have some percentage of invoices, so you still have to find a way to deal with it. Once you get to imaging, either on the front end or back end, now you've got manual or partial auto-indexing. You can have electronic storage, eliminate all those file cabinets, eliminate the need to send documents off-site to warehouses. You can have manual capture from paper or image, so now we're maybe keying from image to help drive some small improvements in terms of keying. There's manual approval workflows still, so we haven't bolted on an enterprise content management or workflow solution. We still have those inquiries by phone. We still have manual reporting, and now maybe we've started to centralize the environment. So once maybe if we're using front-end imaging, we have that ability to aggregate images and data into a centralized server and provide access across the organization, whether it's to a call center, to a sales reps, or whomever. This is the first step toward the paperless office, and it's a critical one. And the early users of our maturity model are reporting that they're starting to do both front and back-end imaging. And this is important. Aberdeen Group finds that 45% of best-in-class companies use an image repository for invoice archival, 45%. So again, if indeed you want to become a best-in-class organization, this is an imperative step. This is the table stakes for my poker players in the audience. Level 3, this is where you really start to see improvements in terms of cost, efficiency, turnaround. This is a workflow-driven environment. So not only are we doing imaging here on the front end, now we've integrated some EDI. We're able to aggregate electronic data as well as images into a central repository. We're automatically indexing these images and data to eliminate the opportunity for misfiled or misindexed information. We're leveraging workflow and enterprise content management technology. IFO's AP automation study is going to report that workflow technology is the #1 priority of survey respondents for 2013. That's no surprise to me. If you believe the chart from earlier that getting visibility into information is the top priority, the top challenge, you better believe that workflow and enterprise content are critical. And that goes hand in hand with the use of OCR and ICR technology, optical character recognition and intelligent character recognition. Essentially the ability to interpret either printed or handwritten data on invoices to convert it into actionable digital information that can drive all those downstream systems, whether it's an ERP or CRM. Once you've got that data, you can start to really reap the benefits of those big enterprise systems that your companies have invested millions of dollars in. In many cases, a workflow-driven environment will use an image portal to eliminate some inquiries. So now you're able to allow your suppliers to automatically come in and check an invoice status, maybe even a payment status, be able to send you some sort of messaging for collaboration. Maybe it's a dispute. Maybe it's a simple service request. But it doesn't necessarily have to be tied to an e-invoicing solution, as many folks would have you believe. This can also be part of an imaging environment as well. Now you start to see automated reporting come in. Once you're able to capture that information via OCR and ICR, now you have tools to allow you to drive some automated reporting. And in a workflow-driven environment, this really empowers your organization to move to a centralized, highly connected environment. 3/4 of respondents to IFO's AP automation study this year report that they operate in a centralized AP environment. It's critical to getting economies of scale and that information reporting that your organization needs, that you move to a centralized environment. And importantly, a workflow-driven environment is critical. This is really the linchpin in the 5 steps because it's the bridge to electronic invoicing. It's the bridge to where so many of you want to go. This is the critical step, and this is the one I think that organizations really ought to be pushing toward if they're not already there in short order. When we talked to, when we looked at the results of the early users of our maturity model, what we found is many of them were indeed already doing some tools, using some tools for automated reporting and discount management. 25% in both cases were already using some automated reporting and discount management tools. Now look, I know that that's not an overwhelming number, but this is a far cry from where we were just a few years ago, and it's illustrative of where we are as an industry in terms of our maturity along the 5 steps. And that brings us to our next poll question, which is about to be displayed on your screen. What we want to know is, does your organization use automated workflow for approvals and exceptions? Does your organization use automated workflow for approvals and exceptions? Yes? No, but planning to within 6 months? No, but planning to within 12 months? No, but planning to within 24 months? And no, with no plans to do so. Go ahead and take a moment to respond to the poll question now displayed on your screen. And thank you again. This is a great group, Charlie, for being responsive to these poll questions. Ordinarily, I have to make small talk, but I'm finding most folks are responding quickly. One more second. Of course, I say that, and then everybody just stops keying. Let's go ahead and share the results of what you all said. This is very encouraging, Charlie. 1 in 3 folks on our line say that they currently use automated workflow for approvals and exceptions. So that's actually a little bit higher than the early users of our maturity model. The second highest respondent rate, 1 in 4, say no, and you have no plans to do so. Before we go on, here's what I want you people to do if you're in that bucket. I want you to use the chat tool on your screen and send me the reason that you have no plans to use workflow for approvals and exceptions. I want to hear from you. Of course, we won't use your name, but I want to hear the reasons why. 20% of you, 1 in 5, say no, but you're planning to within 12 months, and then the remainder are either going to use the technology within 6 or 24 months. But Charlie, the plurality of folks on the line are already using workflow for approvals and exceptions. How does this compare to what you hear when you talk to organizations?
You know, so I think you hit the nail on the head, right? It's clear from the Aberdeen research, it's clear from the market momentum that we see that I think organizations are understanding that this foundation, right, whether it's imaging or whether it's imaging in collaboration with workflow, really forms a foundation upon which you can drive a lot of other meaningful benefit into the organization. And so, you know, if we work with companies of different maturity on a regular basis. But I think, to your point, having this foundation in place or a plan to put this foundation in place really opens up the opportunity to share in the value that can be created in the later levels of maturity.
And Charlie, this is an obedient audience. We have got responses flooding in about why some people won't use the technology. One person says, we'll only use workflow technology for quantity-based POs, not blanket POs. Well, that makes some sense. We also heard from another respondent who said, We are a small company with one AP processor. We are undecided about the business case. Talk to me about that. Small organizations, there must be a business case for workflow even in those organizations.
Well, it depends. No, that's a very good question. We get that more and more. You know, and maybe we need to make that point really explicit, is clearly the support for automated workflow has to fall in line with a specific business process. And so to the extent that you need to route documents for approval, or there is exceptions that need to be handled and so forth, I think our point here is use the workflow tools rather than handling paper or using something that's not as well constructed in terms of technology or as well as its ability to, to standardize process. So it's not workflow for workflow's sake. It's workflow based on a business case. If you're a very, very small organization where, the separation of the accounting, responsibilities doesn't have to be that broad, then, workflow automation may not be the key driver for a business case. But we find organizations that can be as small as, 10 people, 15, 20 people, up to 10, 15, 20,000 or more organizations often find today, with the types of technologies that are available, there's a better case to be made for a return on investment in some of those tools, technologies, and processes than there ever was before.
Charlie, a couple of people have written in here, we are in the beginning stages of evaluating automated AP processing, and we are not sure that there is a business case for workflow approvals and exceptions. What are some of the key elements of that business case that these folks ought to be looking at as they go through this process?
So the general things that we help customers look at is, where is their excess cost in your AP process? And that could be cost in terms of, hard dollar costs. So if you've got more people performing a manual routine that could be automated, clearly there's cost there. In many organizations, when they get smaller, it's more about opportunity cost. And so, you may have a half of person's time or distributed around an organization, and so it's not so much that, we can't get rid of a half of a person. That doesn't make any sense. But the fact is, most organizations we work with complain that there's too much to do. There are higher value-added tasks that, all of us could be doing rather than just keying invoice information or routing it around for approval. So it's the cost, be it hard dollar cost or opportunity cost in many organizations. It's the time it takes to get the information into the system, because quite frankly, when you've got a stack of invoices that are sitting in a cubby or a cubicle or in a pile on a desk, it's very hard for financial planners to determine what to do with cash. And as the organizations get larger and larger, that strategic cash management really goes to the very heart of where, in many organizations, right, it pushes right back to procurement. And so, alignment between procurement and payables only happens when we're capturing information from invoices. It's available in payment systems, either to be made paid or to be used and postponed. But I can't make those decisions if the information's not there. And then, of course, there's the third piece of it, which is just the quality. So it's the quality of the data in our systems. The quality in terms of, okay, I want to make sure I pay the right supplier the right amount. But if I'm going to step back and start to look at, again, more strategic types of analytics that can be done with the payables data that I have, then having data quality is paramount to that. And so we see organizations that see this. And when we talk about workflow, keep in mind, like I said, workflow is there because I think it's a tool that's better than handling paper. But one of the key objectives for larger organizations is simple process standardization. And so while on the one hand, we may have pockets of highly efficient AP operations in the organizations, or it could even be shared service centers that are regionally located or country-specific located that are doing things exceptionally well, most of those organizations are still facing the challenge of standardizing what I'll call workflows and business processes in a more global sense. So there's, whether it's whole scale, perhaps for a smaller organization that's trying to understand whether workflow has a fit, in that case I think process standardization is kind of a core piece of it. As you get into larger organizations, we find the same challenge existing. It just happens to be across countries and regions around the globe.
And I'll also mention that you mentioned Aberdeen Group. They report that 51%, more than half of best-in-class companies use workflow technology. So again, this is table stakes. This isn't a nice to have. Charlie, you wanted to share with us a case study of an organization that operated in a workflow-driven environment and actually achieved some significant savings.
Yes, so this just happens to be a company that we've worked with that we've shared this story, and I think it's particularly relevant as we think about, we try and put some color around what an organization can do. So in this case, the organization that we work with is a company called Bentall Kennedy. It's a privately held organization. They've got, they're in the business of real estate advisory and investment services. They've got offices across North America and into Canada, and they went through this journey, in fact, very, very effectively through the stages of image enabling and workflow driven automation, right, workflow-centric automation in their organization, and have received tremendous benefits, both hard dollar and soft dollar benefits. So from their standpoint, as I was just alluding to, they face, the invoices in this case are actually processed and handled out in the remote locations. They've got 50 different office locations across the country and across, if I can just back up. There we go. And so for them, it's all about standardizing process. And without automation and handling paper-based process, there is very little, if any, standardization. And so from their standpoint, implementing a content management strategy that include imaging and workflow really allowed them to work out process inconsistencies and tie the data directly into their J.D. Edwards system. The benefit to them is they get better visibility, far better control, a redundancy, an elimination of the redundancy in process and the physical paper waste that they otherwise had to go through. And you can see, even for an organization like this, which, they're doing 1,000 invoices a day from across all of these different locations, the return on their investment in the technology and the time to implement it is they're saving more than $1 million annually, which is a hard dollar savings. But in addition to that, right, they have access to information electronically that they never had before. They have an audit trail that can take anybody in the organization to the specific document. If they need to trace it back all the way to the specific invoice, they have, at the touch of their fingers, access to that information. And they're improving cycle time so that they can better manage cash and working capital, right? Pay those suppliers that offer an early payment discount in advance of those that we don't have strategic buying relationships with, and save the money. Take it directly to the bottom line. So just a fantastic company. It's been a tremendous opportunity to work with Bentall Kennedy, but I think in return they've really improved process and it's driving measurable results to the bottom line for the company.
And as I said before, it's so critical to reach that level of a workflow-driven environment because that helps you set the foundation, as Charlie just alluded to in the case study, to an E-enabled environment. And E-enabled doesn't necessarily mean just electronic invoicing. This is an electronic environment where you have the ability to receive invoices via imaging, EDI, e-invoicing, email, with as little paper as possible. Automatically index, aggregate this information, and then manage it using tools such as enterprise content management and capture any data necessary using, again, OCR, ICR, as well as intelligent data capture tools such as barcode reading, optical mark sense, be able to do PO line pairing. So now you're driving processes of matching electronically versus throwing people at it. So in this case, you have automated approval workflows. You have three-way matching. You have routing. You have dispute management tools. And of course, there's a back-end self-service portal for inquiries, whether it's on an invoice or a payment. And there's also automated integrated reporting. And also in level 4, you start to really be able to access the tools required for this concept of a financial shared services environment. So to create the center of excellence. And typically this is for larger organizations, but smaller organizations can benefit as well. Be able to consolidate functions around finance into one or several organizations so that you can gain economies of scale, improve data aggregation and reporting. And here, this allows you to take significant steps towards straight-through processing. And really, when I think about an E-enabled environment, I think the critical takeaway is that there's multiple channels for receiving invoices in an automated way. So we're not just talking about electronic invoices. We're not just talking about paper. We're talking about being able to have those tools that can allow you to facilitate the receipt process and processing and management of all those different channels. And when you look at what's going on in organizations with exploding data volumes, and more importantly with new channels for ways that information enters an organization, this is really critical. And I think you're going to see organizations start to reset their thinking toward this as we move forward. And Charlie, you wanted to talk about two case studies that really illustrate this concept of an E-enabled environment. And one of them, Walt Disney, was actually a winner of the 2012 Huntington Innovation Award given out by IFO.
Very good. Perfect. Yes, nice segue. So they did win the Innovation Award in 2012, and for those of you who are at Fusion, you may have been there to see the receipt of that. The thing that's interesting about the Disney organization, and these are some metrics that they recently shared in a presentation. I'll give you a quick backdrop. They do about 5 or 6 million invoices annually. When we first started working with the company, they were at 92% electronic invoicing. So again, back to this notion of sort of being on a journey towards a paper-free environment. I would suggest to you that they're very advanced in terms of their automation and the sophistication of their processes, and that 92% electronic is by many measures very sophisticated. What that left, though, was about $500,000 or $600,000 that were, or 500,000 or 600,000 invoices that were still being manually processed because they were received both as paper and as emails and attachments. So there's still enough there to create the business case for automation. In this case, the scope of the project focused initially on North America and EMEA. They track and have metrics for virtually every component of the process. And in this case, their cost per invoice was at $1.71. So if you were, back to Mark's earlier comments about most organizations being between $2 and $5, some being greater than $10 an invoice, and best in class being less than $2 per invoice, by that measure, Disney was better than world class in terms of their cost per invoice. And yet, if you follow along with me here for a moment through some of these statistics that map out a 10-year journey that they've been through, you can see that there's constant improvement opportunity there for them. So just looking at headcount, headcount as it relates to the department and handling of the transactions has been cut in half. So it's to say that previously a significant amount of these folks were simply doing data entry. They weren't doing the things that drive value for the corporation. And so therefore, over time, through a combination of attrition and moving people around, they've gotten it down to less than half of where they were, and that was as of May of this year. Defect rates have also gone down precipitously. And so if you look at even in the course of the last 2 years where they implemented this last piece of an automation strategy with intelligent data capture, they've dropped by 4.5 percentage points from where they were down to 6.2%. Keep in mind, too, at these volumes, a 1% change in defect rate equates to more than 50,000 transactions that would otherwise have to be manually held. So a lot of value in that. Invoices per FTE, which is a key metric that we look at many times with organizations, has gone up significantly. I think if you go down to an FTE basis on a daily run, we typically see organizations anywhere between 85 and 125, maybe 130 invoices per person per day if it's entirely paper-based and manual. Automation can drive that up, routinely drive that up to 400 to 600 invoices per FTE per day, and in many cases, we work with customers that do in excess of 1,200 invoices per FTE per day. So there's a lot of value that's created there by eliminating, paper. The payments have gone to 54%. The electronic invoicing has gotten to about 97%, and electronic invoicing, to Mark's earlier comment, is a combination of multiple technologies, right, including EDI, e-invoicing, as we typically think about it, as well as email. And so the simple ability to receive an electronic or an email attachment of an invoice at the Disney Corporation opens up a huge wealth of opportunity for suppliers to interact with them in a very efficient, very inexpensive, and yet easy to confirm and easy to trail way. And then finally, invoices paid on time, which are also here on time, has gone up consistently over time as well. So I think this paints a pretty good picture of how this organization has tracked significant progress over time, and quite honestly continues to lean into the notion of getting rid of paper and really drive continued efficiency. To prove that, we actually have been tracking, they've been tracking the amount of paper volume that they handle. So the blue line at the top is on a monthly basis, how much what the paper volume is. It looks like that's remained relatively consistent, as you can see by the dotted purple line. But over time, up until even just within the last couple of months, the amount of paper that's handled or manually posted has dropped consistently and continues to go down month over month over month. Okay.
That's an
so
impressive
that's an organization,
statistic.
an example of an organization that I think is doing it thoroughly and aggressively on their way to achieving level 5 through and through.
And then you wanted to talk about Annixter, which won this year's IFO Huntington Innovation Award.
Yeah, so a different organization, and again, for those of you who were at the conference, you may have had an opportunity to interact with Annixter. You may not know, Annixter is a $6 billion company. They operate globally. They're in the business of distribution, so cable, security solutions, electronics, and wires, and so forth. They do about 1,800,000 invoices annually. They, too, have been on a journey over many years to, working towards creating optimal efficiency within their AP environment. To just kind of cut right to it, to the results today, they, too, have implemented a combination of technologies. But today, 95% of all keystrokes required to enter invoice information have been eliminated. Their email input has gone up by nearly 60%. Their paper usage is down by nearly 40%. And this directly aligns with a corporate vision and a corporate goal of reducing their carbon footprint. If you actually look at it more specifically, and this is where the automation ties into the business process, they actually process 92% of their PO-based invoices, which represent over 80% of their total invoice volume. They go straight through. So from the point of receipt to the point of posting in their ERP system, there's absolutely no touch. And like I said, that's a combination of the technology they use in concert with their master data, their reference data, and their business process. They get about 74%, nearly 3/4 of their freight invoices go straight through, no touch, and nearly 100%, right about 98% of their expense utilities do go straight through and post automatically. So a significant reduction in paper, but the benefits then are enormous to the organization about what it does to speed the process, reduce the cost, and improve the overall quality.
Very impressive. That brings us to our next and final poll question, which is now displayed on your screen. We want to know, does your organization use a supplier portal for self-service invoice status? Yes, no, but planning to within 6 months, no, but planning to within 12 months, no, but planning to within 24 months, and no, and not planning to do so. Take a moment to respond to the poll question now displayed on your screen, and we'll talk about the results in just a moment. Just one more second. And we'll go ahead and share the results. Quite a dichotomy here, Charlie. The plurality of respondents, 32%, say they do not use a supplier portal and have no plans to do so. 26% say they currently use a portal for self-service invoice status. And 21%, just behind, say no, but they're planning to within 12 months. And then you can see the balance are planning to deploy the technology within 6 and 24 months. What do you make of these results, Charlie?
So I think we're seeing this with customers as well. And as they begin to get some of the foundation in place and are looking to further their journey, a natural way to do that is to focus on how we interact with customers in this case, which may in fact be our suppliers if we're in that part of the business, and providing, the technologies that are available today provide a lot of benefit in terms of being able to interact and answer straightforward, easy questions about payment status, may even go as far as how do we set up a new supplier in the system. But to the extent that it makes sense, in terms of how we relate to our suppliers, I think there's a lot of capabilities with these self-service portals that not only take some of the workload off of our AP staff, but actually provide much better customer support for our suppliers. I mean, the organizations that use them effectively find that it's easier, it's more flexible, we can be more responsive and get a lot of the otherwise, sort of difficult or challenging from the standpoint just of staffing, getting those questions answered very quickly and being very responsive to our supply base.
And our final level in our journey toward the paperless environment, of course, is paper-free. I dream of the Eagles winning the Super Bowl. You people dream of this. It's a fully electronic invoice receipt environment, automatically indexed, electronic content management, really touch-free data capture and data management. You have exceptions-based workflows, self-service portals, as Charlie just described, for inquiries and online dispute resolution, real-time, predictive, integrated reporting that the CFO and the controller crave. And of course, you have this harmonized shared services environment where all of your disparate financial systems are linked, data is aggregated, and you get this true dashboard, this true visibility across your financial enterprise. This is a true analytics-driven, value-focused environment, a far cry from the paper-based, transaction-based environment that you are living with when you're dealing with 100% paper. This is where organizations are trying to go, and this is the objective. So, how are organizations faring? Well, the early users of the maturity model are showing that they have a long ways to go. When we asked about the percentage of electronic posting with no manual intervention, what we found is that more than half of the respondents actually report 0% electronic posting. Of course, this reflects the high number of organizations that are saddled with paper. And when you think that best-in-class companies are electronically posting 70% or more of their invoices without manual intervention, you see that this is imperative that organizations figure out a way to move closer and closer to a paper-free environment. So how is it that you can do it? Well, we've just laid out the roadmap for you. By virtue of this new diagnostic tool created by Perceptive Software and IFO, you have this roadmap to paperless AP, to go from the level 1 paper environment to level 5 paper-free environment. And the beauty of the tool is that it uses not only the 5 levels that we described here, but there's 7 dimensions under each one that touches on the key functional areas required for you to do your job. So everything from invoice receipt to data capture to reporting. And it measures your organization based on these dimensions and then plots out where you fall. You'll actually receive a report like this online to show you where you fall in each of the levels and then each of the 7 different dimensions. So not only do you get a high-level view, but you get to see which dimensions might be holding your organization back from moving closer toward a paper-free environment. But wait, there's more. Once you complete the tool online, you'll receive an email that provides you with a report not only of the findings, but also with some prescriptions, some things to consider doing to help your organization accelerate the process of moving toward a paper-free environment. And this is all available to you at the Paperless Maturity Model website that we're about to share with you. And so, Charlie, you wanted to just offer a few concluding remarks.
Sure. So to sort of wrap this up for this afternoon, and do provide time for a couple of questions if we have them. Just in summary, Mark, I think you stated this far more elegantly and elaborately, but we see this really as a journey. Paperless AP and AP automation is, for many organizations, the best organizations out there, it's not a destination. It's a continuous process. And I think if you look at it as such and incorporate the metrics, your organizational design, and the budgeting that it takes to kind of continue to chip away at it, what you'll find over the course of time is that you're measurably further down the road you were than when you started. Second, paper is a fact of business for AP organizations. And so while some industries and some organizations are better able to conduct electronic transactions, or at least a higher percent of electronic transactions, I think the world, at least as far as we can see, is going to have to accommodate some level of paper. And so with that, you've got a plan. You've got to plan how to, your strategies, your technologies that can help you work through that. Reducing the focus on the transactional handling, keying data or routing paper or other documents allows you to focus on value. We hear this time and time and time again, that the organizations that have gotten transactional efficiency under control and made it a priority are now able to do far greater things with the data that they have to improve the value of either their teams in terms of being more of a strategic advisor or a trusted advisor to your senior finance organizations, or in the construct of shared services, really creating a center of excellence for how to handle a back office function like AP. And then finally, look, it's hard to get to where you're going if you don't know where you are. And as silly as this sounds, I think one of the outcomes from using this tool, particularly if your organizations have perhaps several different people complete the survey, complete the tool and the assessment, bring the results to the table and use it as a way to discuss any differences of opinion. Because I think getting those things out on the table, doing it in an organized manner, will help lead a productive discussion and bring all the relevant parties to the table to prioritize and think about what makes most sense in terms of moving forward. The benefits for it, I always love this one, Mark, because I think at the end of the day, the organizations that are putting a focus on this, on their back office operations like AP, are taking steps to move it forward measurably. I mean, listen, we in the industry recognize the leadership of these organizations to kind of help chart the path for those of us that, are looking to follow along in the footsteps. And so, across industries, around different regions of the world, it's always very rewarding when we get to work with a customer, or I know somebody personally who gets the recognition that they deserve for doing the hard work day in and day out to bridge these gaps. And groups like the IFO and others, I think, are the perfect venue to showcase your success, whether it's from level 1 to level 2 or it's from level 3 to 4 or 5. I think there are great success stories throughout. So with that, Mark, I'll turn it back over to you. If we do have a couple of questions, I think we may have a minute or two left.
We do, and the first question is, what is the URL for this tool? And it's now displayed on your screen, paperlessofficematurity.com. At the conclusion of the webinar, I encourage you all to go there and try the tool, and as as Charlie just said, find out where you are today. The first question, Charlie, is for you. What is your recommendation on the dimension where organizations should begin their focus in moving toward paper-free? So in other words, this person wants to know, is there one of the 7 areas where an organization should particularly focus?
That's a great question. I think, depending on what level you're at, may put a finer point on that. But I think you start at the very front of the process. How are you receiving your invoices today? So, and I think that then begins to set a lot of the strategy for you. If it's coming into one location, then obviously you can begin to segment the media that's being used to send it. So if it's all paper-based and it's coming into multiple locations, we may set out on a different strategy, or we may think about consolidating that through a different channel. Similarly, if we look at an organization like Disney, they've centralized and standardized that around shared services. It's more about the types of invoices that they're receiving that dictates what type of technology might be most appropriate. But the first thing to do, if you're sort of in the early stages, is, like we said, image enable. Get rid of the paper at the beginning of the process. Then think about standardizing workflows, which is a combination of both technology and process design, right? And then the things that you get into level 4 and 5 are, how do you get rid of what I think of as the long end of the tail? So those invoices that may be few in volume from any given supplier, but are high in cost because of their transactional complexity or just the diversity of it, then begin to think about how to, to get rid of those as well. That's a long answer, perhaps to a simpler question, Mark, but I think the whole design of the tool is to help sort of think about focusing into the right area that's going to yield the biggest benefit to you fastest.
Another question for you, Charlie. What big obstacles should organizations be aware of or prepared for as they move toward a paper-free environment?
The biggest issue that we run into is simply that of managing change. So wherever you are in this model, presumably you've built efficient processes at some level around the way you're doing it today. And the single biggest challenge we see, which is also a challenge that's not unique to invoice automation and so forth, but it's just simply change management. Disrupting the current process in favor of something that's envisioned but isn't always crystal clear yet is frightening to a lot of people. And so the traditional methods of large enterprise project management are as important here as they are in any type of enterprise deployment, which is get the buy-in from senior management, set the direction and the standard and make it a mandate that we're going to change, and let people know how the change in their functional responsibilities is going to take place over time, and that we see very few organizations that have way too many people standing around. It's more a function of we're going to change what you're doing and not just ship you off. And so I think allaying those concerns and helping people really envision what a new reality can look like so that they understand it breaks down a lot of those barriers to change. I tell you, the technologies that can actually support that from an automation, believe it or not, are actually relatively easy to implement. But setting up the organizational dynamic to be ready for that kind of change and embracing that kind of change, some companies are more accustomed to it than others, but that's kind of a key challenge.
I hope you all will go to Paperless Office Maturity and try the model, and I think you'll find the information it provides you to be valuable. And as Charlie said, I think it'll be key not only in the short term, but potentially in the long term as well. And that will have to be our final word on behalf of Charlie Kaplan and Perceptive, Kimberly Chatfield, and IFO. This is Mark Brousseau. Thank you all for joining us this afternoon. Hope to talk to you all again soon.